markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here on Bloomberg. Fed minutes Wednesday, just about the lows of the session. Equities and treasuries remain under pressure as traders digest hawkish comments from Fed officials at their last meeting. Right to the numbers, with the S&P down 28 now at 4410, a drop of 0.6%. Again, very close to session lows. The Dow is down 157 points for the Dow Jones Industrial Average. That is a drop of almost 0.5%. NASDAQ, the composite index, down 0.9%, lower now by 127 points. 10-year yield, 4.27% with the 2-year, 4.98%. Spot gold, $18.94 the ounce, down 0.4%, while West Texas Intermediate crude now at $79.21 a barrel, down 2.2%. Former Treasury Secretary Larry Summers is cautioning that the recent run-up in 10-year yields may have further to go, and that pressures are building to keep those benchmark rates much higher than expected over the past 2 decades. He spoke about the economy with Bloomberg's David Weston.
My guess is that the economy will stay strong for at least a little while from here. I'd be very surprised now if a recession started during 2023. I'm not as confident looking out a longer distance as many other people are, in part because I think the Fed's going to feel pressure to continue to tighten.
And you can hear the full interview with Larry Summers when you tune into Bloomberg Wall Street Week, Friday night, 6 o'clock, right here on Bloomberg Radio. Target shares higher after earnings. Target up 2.6%. Walmart reports tomorrow morning. Walmart down 0.3%. Retailer TJX after earnings up 3.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So another 24 hours, another batch of Chinese headlines, as you just heard in our chat just a few moments ago with our TV colleagues. Top of mind is just simply the continued weakness and inability of China to kick up their once very reliable growth machine. The worries continuing, Tim, on news that one of China's biggest shadow banks skipped payments on several investment products, sparking rare protests in Beijing as the fallout from a deepening property slump spreads to the financial sector. And this has been the worry. Is this potentially China's great financial crisis? Not saying it is, we're just questioning.
And that's a question we're going to continue to ask. The liquidity challenges we are seeing in China underscore how troubles in the property sector and China's weakening economy are now spreading deeper into the financial industry. Many trust products are backed by real estate projects run by troubled developers such as China Evergrande Group. And remember, the Chinese Central Bank on Tuesday cut interest rates by the most in 3 years, Carol, this in a bid to revive growth.
Yeah, that was a shocking move. Nobody predicted it. All right, so let's get to it. To talk about the fundamental economic backdrop, with us is Shahzad Kazi. He's managing director at China Beige Book International. They were founded over a decade ago to basically help institutional investors and corporate CEOs get through and figure out China's notoriously black box economy. So they've developed their own private in-country data collection network to track all things China. So we're delighted to have him. He's on Zoom with us on this Wednesday. Shahzad, good to have you here with us. So China's economy, is it a ticking time bomb, as President Biden recently said, in which he was very criticized for saying? What do the data that you track tell you?
Yeah, thank you for inviting me. Good to be here. Yeah, I don't fully agree with the president's statement, although, of course, the president has it more right than many China watchers who do this for a living. What's going on in China is that you've got a structural slowdown in place. So Chinese economy is well past the years where it used to grow in the double digits for sure, but even something like 6%, 7% growth is now, behind us. The growth that we're looking at into the future for China is probably something between 3 to 5% in the next 4 to 5 years, and beyond that, we probably will see China grow at an even slower pace. And if, of course, risks and crises continue to take place, we may be looking at a China that grows at 1%, or perhaps some years doesn't grow at all.
Shahzad, is this just a factor of a maturing economy, or is the concern that the reopening was a disaster and that there are structural issues there?
Yeah, there are a couple of things going on. The first one is that the old Chinese growth model, which everybody, I think, has been trained on, which is that you ramp up credit, you ramp up investment, and you juice that to get a high level of growth, that has really run out of road. Even if today Chinese policymakers were to continue doing big stimulus and big fiscal spending, they wouldn't be able to get those growth rates again anyway. So there's that structural component of it, inevitable slowdown, as I said, that's taking place. However, there has been a very important change that I think has gone largely underappreciated still by markets. That's that Chinese policymakers, I think President Xi on down, have decided that, look, we don't want that old growth model. We want something that's much more sustainable and much more healthy. And that means that we need to de-risk the system. We need to really work on deleveraging. We need to deflate the property bubble. And we need to transition the economy towards a consumer-driven economy rather than just this big industrial behemoth that China is. Will they ever get there is a separate question.
Well, I was just going to say, Shahzad, are they right to pursue that, to have something more sustainable? Although 1% growth longer term to me sounds like a bit of a bummer for one of the world's largest economies.
Yeah, I think there's, the smart thing to do, of course, was to start working on this economic transition probably even sooner than they did. It just happens to be that they started really working on it with the COVID crisis ongoing as it is. And so you're getting this bit of a double whammy right now, right? With the cyclical downturn, COVID-induced pressures, and of course the structural slowdown all happening more or less at the same time. The fact is the world would be much better off with a Chinese economy that was importing more than it does and exporting less than it does, that would have that would be far more beneficial for countries around the world. They should absolutely be working on it. I'm just not sure they put in all the right policies in place even right now, though, to be able to successfully accomplish that.
Why would the overall world be better off with the Chinese economy that was importing more rather than exporting?
Well, it's one of the world's biggest markets by population size alone. It's the thing that companies have been waiting on for decades now to be able to sell more and more into China. But the problem, by the way, is that they just don't have the income levels rising there. The private sector is not at a place where it can absorb a lot of the young graduates and create high-paying jobs. And so that transition is going to take a long time, beginning with support to the private sector, which is just not coming.
Hey, Shahzad, I wanted to ask about politics and what you're hearing on the ground about the way that people view the Chinese Communist Party and how economic issues, economic challenges could lead to a challenge of their power.
Yeah, I tend to be very, very bearish on the idea that the ongoing economic crisis, and really is a multi-year crisis at this point, is going to threaten the long-term control of either, President Xi or the Communist Party. I think there's been a lot of work done to consolidate power. There is nobody within the party today even who could challenge President Xi, let alone outside of the party, which is a very small probability event. I don't foresee the current economic challenges that China is facing as threatening the party's control. It may sour people on the party. I think China, we may see more, unrest, may see more protests building up. But I just don't think we're in a place where the party loses its control or it's even remotely threatened.
Shahzad, I have to go back to where you said the world would be better off with a Chinese economy that imports more. Increasingly, though, it does feel like President Xi, he is all about cultivating, developing the domestic economy. I understand the import of that. How does, though, companies have been clamoring for 30, 40 decades to get into China and tap that domestic market. And it increasingly looks like anybody who's not a Chinese-based company will not benefit as much unless you're Elon Musk, potentially. So I'm trying to understand how the world ultimately benefits if President Xi's goal is to produce domestically and then sell to its domestic, to sell to its people, especially if I feel like the tensions that continue increasingly cut China off from the world.
You're absolutely right about the fact that bulk of the American companies, the Western corporations that have made long-term China bets actually have eventually, especially in the automotive industry, even, and Elon's facing a lot of problems with having to do price cuts and so forth. Yes, they absolutely ultimately will lose market share to their domestic rivals, which the state backs. I think there are sectors where that is more true, and then there are probably sectors where that is less true. I don't see today the goal of the Communist Party to be this completely self-serving type of entity where they produce and sell to themselves, and they have no foreign reliance whatsoever. That's not the model that we're looking at. So I think if China were to actually become a more prosperous country, bring down inequality levels, become a higher income country, they would be importing the kinds of services and not just actual goods, but other services that the developed world today does. If you look at the luxuries market, you could potentially see that getting bigger. Obviously, we know that there are all sorts of reliance on even basic things like foodstuffs that China remains very much dependent on. So I think it's not even just China importing, but what is China importing? It's not just commodities and oil and iron ore, but other higher end value things as well.
Shahzad, got to be really fast. 15, 20 seconds. What would make you get really nervous that maybe China's having its own great financial crisis? Be very quick.
If a range of these major developers are allowed to fail and fail completely, I don't think it's going to happen. I don't think we get a Lehman moment or a great financial crisis in China. It's not a commercial financial sector the state will step in to provide support, even if it's in part.
So great to check in with you. Shahzad Kazi, Managing Director at China Beige Book International, joining us on Zoom. Thank you so much.
Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Fulton County, Georgia District Attorney Fani Willis has told a judge the trial of former President Trump and 18 of his former top associates should begin on March 4th. That's a day before Super Tuesday, a pivotal primary date on the Republican nomination calendar. That's when the most delegates will likely be up for grabs. The indictment that was returned earlier this week charges them with conspiring to overturn election results in Georgia for the 2020 election. Willis's office also proposed holding arraignments for the defendants the week of September 5th. President Biden is taking bows with Democratic lawmakers at the White House today for their pro-growth climate change law.
1 year ago, with your leadership, I signed the Inflation Reduction Act into law. And one of the most significant laws I think has ever been enacted, taking on the special interest and winning and winning.
Biden's nearly $1 trillion Inflation Reduction Act calls for investments in alternative energy and climate change initiatives, as well as sweeping health care upgrades. Recent polling, though, has indicated few adults know much about the law. The Biden administration is hoping to change that with a cross-country PR blitz. Doctors at NYU Langone Health in New York City say they've successfully transplanted a gene-edited pig kidney inside a human who was pronounced brain dead. Dr. Robert Montgomery leads the Transplant Institute at Langone.
We're excited today to share with you our latest milestone on our journey to create an unlimited, sustainable source of organs for transplantation.
Dr. Montgomery says they're halfway through the 2-month experiment and the patient's major kidney function has continued. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000, all in the red right now. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right, U.S. stocks in the red in a choppy session. The Dow currently down 150 points, S&P straw 27, and NASDAQ is lower by 0.9%. The U.S. 10-year yield at 4.27%. Gold is down 7, oil trading in the red, and Bitcoin is off by 0.3%. Among the main 11 S&P sectors, only utilities were in the green. Telecom and real estate were under pressure, and leaders to the upside in the Dow, Travelers and Home Depot, while Intel fell 3.7% and led to the downside. After earnings, Target rose 2.6%, while TJX climbed 4%. And in deal news, ArcelorMittal is weighing a possible bid for U.S. Steel. In other news, trucker J.B. Hunt fell intraday after warning on tough conditions in the truck market. And wrapping things up, Cisco reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, got just under 18 minutes left in today's trading session. We've got equities, as you just heard from Charlie, hovering near their lows of the session, down just shy of 1% on the NASDAQ, as you just heard, and then watching what's going on with treasuries, which have moved up over the day. And you've got that 10-year right now at 426, 2-year note with a yield of 497, so just below 5%. Got a great guest to talk about the markets.
Yeah, I always love it when Jeff comes by. We got Jeff Krumpelman, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors. He's in our Bloomberg Interactive Brokers studio, visiting us directly from Cincinnati. Jeff, good to see you. How are you?
I'm doing great. I always love to come by, too, so maybe a win-win there.
Well, we love it when you join us. So I was reading your note a little earlier in the day, and you guys are really bullish on not just what you have so far this year. You guys, you said you're not surprised by this recovery rally, but all the way into the mid part of next year, where you got a 4,800 to 5,000 target on the S&P 500. What gives you the confidence?
A lot of people just take that. I think so much of the world is bearish and negative. We're not ragingly bullish. I think we're measured, and we've been measured in our message. While we have a target, 4,500, we think the fundamental drivers of the economy are just far stronger than the bears or the negative people think. So, you don't have to necessarily knock the cover off the ball. You just have to do better than the negative naysayers believe you're going to do. And we're talking about solid earnings growth. An economy, my goodness, look at the Atlanta Fed. They've got now targets for Q3 GDP growth of over 5%. Retail sales numbers are good. And I think the point is, for every negative you throw at me, I'll give you an offsetting positive, and they cancel out, and they tilt neutral to normal. And so we're saying, be at your normal stock allocation. Don't be below it. Don't sell. Don't be ragingly bullish. But, we do look for decent, almost normal returns over the next 12 months, when the rest of the world's saying, at one time, 3,100 on the S&P. So
you're not a little nervous that everybody all of a sudden is like, no recession? And I would argue that I feel like there's been a lot of bulls coming out. It's interesting. I feel like a lot of the stories from strategists on Wall Street, Jeff, are about, raising their targets. And then I do feel like we do have investment managers come in, and then they're more like, yeah, we could take a little money off the table here.
I am nervous.
It's just interesting, the difference.
I am nervous. I'm able to be nervous from a position of strength, because we've been telling people to, be measured, hang in there. It's not so bad. I've been surprised. We said 4,500 at the end of the year. We're at 4,500. So
We're at 4,400.
well, we're 4,400 right now, but we were at 45. You know, come on.
I know.
We're in the range. But I would say at this point, you need to start asking yourself what could go wrong. And it's been the Fed, it's been inflation, and I'm sure everyone is just so sick and tired of hearing about that same wall of worry. Now, you know, it could be a number of things. China is in the news. Rates ticking up over 4% on the 10-year Treasury. People are going to start saying, well, hey, are we going to reinvert on the yield curve, not for good reasons, but because the 10-year is going to be at 5% as we bond vigilantes worry about fiscal debt. So there's plenty to worry about. We think all of those things will be managed adequately, and that the fundamentals, the valuation, and the technical price trends, those things that really matter, will drive healthy returns. But do I think we could see 3,900 before we see 4,500? You betcha.
So volatility. So what gives you the confidence that you think that things will be managed adequately? And I'm assuming Fed policy, like what goes into that basket that things will be managed adequately?
So, you know, if you look at things like what's on the radar screen, inflation's still out there. You've got rents finally going negative on a year-over-year basis or a month-over-month basis. That's 30% of CPI. PPI is going at about 1.5% right now, core CPI. That is a leading indicator of CPI. So that's moving in the right direction. That will give the Fed the ability, maybe not to immediately halt, but boy, they're in the ninth inning right now. So that's a positive.
Even with a strong labor market?
Even
and rising wages, I feel like day after day we talk about unions and new union contracts and people getting paid more.
For every positive, for every negative, I'll give you a positive. Productivity growth in the second quarter was over 3%. Unit labor costs are at multi-year lows. So all of that you say, touche. I'll come back with one that will say, it's mixed. Why are you worried? I think that you have to say...
Because as soon as we stop being worried is when I get nervous.
Don't get complacent. So here's the point. If you were a nervous Nelly, but you didn't sell before, we told you to go to neutral, and your allocation was normal, and this rally has taken you to above normal, cut back to normal. You don't need to, just slash your holdings, but, don't, as some people say, pigs get slaughtered. So don't let that happen.
Okay, so what about the Fed's goal of bringing inflation to 2%? This so-called last mile, getting from 3 to 2. How long does that take, and when do you think the Fed would cut rates?
I don't think the Fed feels like, in all honesty, that inflation has to go to 2%. I think that we're moving in that direction, but I think the average inflation rate's 3.7%. If you get somewhere in that 2.5% to 3% range, I think the world just calms down. And I think Jerome Powell, personalities matter, and I think at the end of the day, he's a full employment, equal income kind of guy. He doesn't want to be Arthur Burns, so he's really leaning this other way right now. But eventually, when we see that inflation truly is, rents are coming down, PPI is coming down. The news out of China, everyone has a negative spin on China. The good news about that? Import prices are collapsing. That means inflation is going to be lower in the U.S. and actually U.S. demand for goods is rising. Services have been on fire. Goods are coming back because Chinese prices are coming down. So again, for every negative, if you really look under the hood, I'll give you a positive. And so I'm like you. We're paid to worry for our clients. We're paid to worry for the world. But when we really look at the data, I would be worried about getting too negative. That's what would worry me. So
valuations are a little high.
Okay, so let's look at valuations.
And just got about 20 seconds.
Meg 8, close to 30. The rest of the market, 16 to 17 times. And I would say active management, and this is where I really get excited. There are so many stocks out there that are trading at below average PEs that have great fundamentals, and that's where I think it's a stock picker's market.
Is there a sector you would buy right now if you had new money, real quickly?
Real quickly, I would say the capital spending is where you really want to look. We got re-onshoring, nearshoring, whatever you want to call it, infrastructure spending like crazy. So capital goods, engineering, construction, and those related.
Got to run. Be well. Jeff Krumpelman, Chief Investment Strategist over at Mariner Wealth Advisors, also Head of Equities here in studio. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are awaiting the latest numbers out of Cisco Systems. It will deliver its fiscal fourth quarter report along with a forecast for the current period, providing investors with a window into the appetite of corporations for technology infrastructure. Amazon is imposing a new fee on merchants who do not use the company's logistics services, a change many of these sellers consider coercive and surprising since the U.S. government is poised to file an antitrust lawsuit against the e-commerce giant. Amazon shares right now are lower by 1.7%. Coinbase Global has gained approval to sell cryptocurrency derivatives directly to retail consumers in the U.S. And with more on the story, here's Bloomberg's Dan Schwartzman.
Charlie, the offering will launch within weeks. Coinbase Financial Markets, a subsidiary of the nation's biggest crypto exchange, has secured approval from the National Futures Association to operate a futures commission merchant and offer access to crypto futures. Coinbase has been working on the derivatives push for some time. It applied for the NFA approval almost 2 years ago. The approval comes amid Coinbase's legal battle with the U.S. Securities and Exchange Commission. The SEC sued Coinbase in June for operating an unregistered national securities exchange, broker, and clearing agency, as well as for selling unregistered securities. Coinbase said the agency doesn't make registration possible. Charlie?
And that's Dan Schwartzman reporting. Coinbase down 0.1%. American Airlines plans to expand flying to Shanghai early next year. And those are some of the top company stories that we're following for you at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right. I said no, because
Big sigh.
Foxconn is like, no, we're moving to India.
Yeah.
Sorry, China.
I mean, they've been building some iPhones in India for a few years now, but this one's a big deal, Carol. You mentioned this earlier in the program when we were talking about this decoupling from China. Foxconn, Taiwanese company, they make a lot of stuff for Apple. We got our Bloomberg team on this story. Apple's next-gen iPhone 15, it's beginning production in India in an effort to further narrow the gap between its India operations and its main manufacturing base in China.
Yeah, so this Foxconn technology plant in India preparing to deliver the newest devices only weeks after they start shipping from factories in China, as the company is looking to really quickly increase the volume of new iPhones coming from India, according to those familiar with the matter. So we know Apple is on a multi-year project to diversify its manufacturing away from China. They are de-risking their supply chain for its most important products, read iPhone, as those tensions between Washington and Beijing make trade less predictable. I mean, these are some of the things that lead to big investment elsewhere. And this is why I feel like we don't quite know how all of this ultimately impacts China and the global economy going forward, and where kind of the outperformers, the growers in terms of nations are ultimately, and versus where those that suffer.
Well, it brings us back to our conversation that we had with Shahzad Qazi from China
1% growth in China, maybe longer term?
But he said the country is preparing for a future that it's transitioning from being a manufacturing hub to one that's a services hub. I mean, it just makes me think of what happens when a country is no longer
like the U.S.
an emerging
economy, right?
Exactly. It's no longer an emerging economy. China's got a long way to go to do that.
Yeah.
But moves like this from Foxconn contribute to that.
Yeah, and I just think about, we talk this deglobalization that's going on. I mean, I guess, it's just interesting to see this. The scale of the India production for the iPhone 15, by the way, will depend on the ready availability of components, which are largely imported, and the smooth ramp-up production lines at the Foxconn factory outside of Chennai. And hopefully I'm saying that correctly. So you do think about, just so much was in China, right? And the components and so on and so forth. So we'll see.
Apple has already tripled iPhone production to more than $7 billion in India in the fiscal year that ended in March. And Carol, the company didn't even open its first retail store in the country until April.
Wow, so that's pretty big.
Yeah.
That's a pretty big ramp up. All right, guys, we're ramping up, gearing up. You pick your words, how you want to describe it, but we're getting ready to head over to our TV colleagues and talk about that closing bell on this Wednesday, just minutes away, because Beyond the Bell starts now.
It is still relatively light, but we move closer to these closing bells with our full market coverage, as always, right here as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenovic. Welcome to our audiences across our Bloomberg platforms. Carol is smiling, but the market isn't smiling right now, Carol.
No.
Right across the screen, and right now, most of the indices at session lows.
And similar to yesterday, some fairly broad-based selling. Most names in the S&P 500, Tim, are lower on the session.
Yeah, we just spoke to Jeff Krumpelman over at Mariner Wealth Advisors. He was in the studio with us, and he said that he's still bullish. He said he didn't describe himself as bullish, but I'm going to go ahead and apply the label to him because he thinks that we could see 4,800 to 5,000 on the S&P by the mid part of next year. But we could, on the way, it could be bumpy. He said we could see 3,900 on the S&P until we get to that.
You also, of course, have pressure from overseas. What we're seeing in China, the offshore yuan blowing right past 7.3 per dollar, and the efforts by the PBOC, they're not really doing much to slow the slowdown.
We talked a lot, of course, about technical levels, and those are back in play as the NASDAQ, the S&P are now below some of their key short and intermediate term moving averages here, and that could, of course, end up becoming a big part of the story here, particularly with volumes light. Sometimes when you get those light volumes, that means technicals tend to drive the market maybe much more ferociously.
Yeah, and you look at some different industry groups, and I will dig a little bit deeper in just a moment, but you take a look at something like the home building industry. It's down, those stocks down about 2.4%, some underperformance. We did get some economic data points on that today. So some markets, or some sectors of the market, I should say, remain having a tougher time today.
Yeah, absolutely. And of course, as we had that spike lower in U.S. equities here into the close, we had a spike higher in the VIX, back around 17 as we get the closing bells in New York. Down 0.5% on the Dow Jones Industrial Average, firmly below 35,000. The S&P 500 lower by more than 30 points, or about 0.8%, while the NASDAQ Composite is going to finish the day down by about 1.2% here on the day. The Russell 2000, that's your relative laggard, lower by 24 points, or 1.3%.
All right, I'm going to go to those Chinese names that trade here in the United States. We've certainly been talking about China, it feels like, every day for the last week, easily. Down another 1.6% today. But Scarlett, you're looking at the NASDAQ Golden Dragon China Index down about 7.5% in the last 4 trading days. So we continue to see that index move lower.
And I'm looking at the decline advance line on the NYSE. You have 3 stocks down for every one that is higher on the stock exchange. When you look at the industry groups by 24 groups, that's level 2, you only have 3 industry groups finishing in the green. There are the insurers, as well as the utilities and food and staples. And insurers really being led by Progressive, but you look at utilities and food and staples, that's a very defensive posturing. On the flip side, the leading decliners are autos and components, chip makers, and media and entertainment, each down at least 1.3%.
All right, folks, so definitely a more negative tone in the trade today. Low volume, as Romaine mentioned, but let's get to some of the individual gainers. And there's a few standouts when you talk about the retail sector. TJX finishing up with a more than 4% gain in today's session, the number 4 gainer in the S&P 500. I believe an all-time high for that name today after reporting stronger than expected comp sales for the fiscal second quarter in both the TJ Maxx and Marshall brands, and also their home goods businesses. They increased their projections for the full year. Stock's up about 13% so far here in 2023. Let's go to Target, which has been an underperformer in the retail group, finishing way off its highs, at its highs today, up more than 8%, but still finishing up this Wednesday with about a 3% gain. A surprise big surge in their profits in the second quarter, overshadowing the company's really increasingly cautious outlook on the rest of the year. The company did cut its annual profit forecast. Sales decline was Target's first in 4 years. More to that story. You can check out more on Bloomberg.com, but again, up 3% in today's session. And then I do want to go to, Scarlett, you mentioned this, Progressive, number 1 gainer in the S&P 500, finishing with almost a 9% gain, so just off its best levels of the day. Number 1, heavy volume, options 2 surging, call volume way outpacing put volume, up the most since March of 2020. Analysts said the monthly results showed improvement. The insurance company reported net premiums written for July of $5.95 billion versus $4.93 billion. That's year over year, so some outperformance there, Tim.
All right, you got the outperformance. I got the laggards, the underperformers today. Another day, another price cut from Tesla. Shares finishing the day down more than 3%. The second worst performer on a points basis in the S&P 500. This time it's versions of the Model S sedan and Model X SUV in China, cutting prices by about $9,600, coming just 2 days after Tesla marked down the long-range and performance versions of the Model Y SUV, and just 1 day after Tesla actually introduced lower-range versions of its Model S and Model X here in the U.S. that cost significantly less than their earlier counterparts. We talked a lot about China today. We're going to continue talking about China more throughout our program. Worth looking at shares of Tencent finishing the day down by close to 3%. This is the ADRs that are traded over the counter here in the U.S. The company did report strength in online advertising thanks to its TikTok-like video feed on WeChat, but fell after reporting second quarter sales that came in below estimates. And the strength in online advertising was offset by revenue from games both at home and abroad. Fell short of expectations. And here's a good one. Saks Prente Golf. Romain, do you know this one?
Yeah. It's been all the talk.
Are you a golfer?
Yeah, I am.
Yeah,
Really? I didn't know that.
Well, if you need a new $400 putter,
I don't.
These guys make it. Finishing the day
I should point out that I am getting a driving iron delivered.
Wait, you're getting a driver? They're going to pick you up and take you to work? Is that what's going to go on?
It's a golf.
I thought you already had
It's a golf club, Carol.
What is
It's a golf club. Okay, well, yesterday shares were up more than 600%. It was the best performing, it was the strongest U.S. stock market debut of the year. We can go ahead and call that then. Now it's got a market cap of just over $60 million. Anyone know how much it did in sales last year?
No, how much?
$190,000.
90,000?
So that
$190,000.
That buys you like a few putters, basically?
Yeah. Well, putters are $400 each. It's not that expensive.
Well, I hate to break it to you, Tim, but they get more expensive than that, believe it or not. And as I found out the hard way, the more you pay, it doesn't necessarily correlate with a better game.
Obviously, I'm not a golfer.
Yeah, just lighter wallet. That's the correlation there. And, I guess interesting lighter wallets in the treasury space, at least on a price basis. Yields up across the board here on the longer end of the curve, up about 5 basis points on the 10, the 20, and the 30-year. Your 30-year yield firmly back above that 4.3 level, the highest level going back to October of last year. And, of course, that 10-year still camped out at its highest level going back to mid-2008. So this really raises a lot of questions, guys, about sort of what's going to drive this market. And actually, we are getting some earnings crossing the wire right now. Maybe that drives the market. Cisco, blast from the past, were out with their earnings here for the fiscal fourth quarter here. The company coming in with revenue at about $15.2 billion. That looks like pretty much in line with estimates here, and adjusted EPS at $1.14, slightly higher than what the street was looking for at $1.06. Now, here's your guidance going forward. On the fiscal first quarter, the company is saying that its revenue should come in at about $14.5 to $14.7 billion. That's roughly in line with the average of street estimates here. And the company is also saying that its adjusted EPS for the fiscal first quarter would also come in slightly above estimates. So you see the shares there slightly lower here in after hours trading.
Yeah, it's interesting. What we want and what we want to hear from Cisco specifically is some insight into what the corporate environment is basically spending on IT. And we do have Chuck Robbins, the chair and CEO of Cisco, in the press release, talking about a milestone year for Cisco, record performance in both the full year and the fourth quarter. He says we are seeing solid customer demand, gaining market share, and innovating in key areas like AI, security, and cloud. This momentum gives us confidence in our ability to capture the many opportunities ahead. So sounds kind of upbeat, but investors may be a little disappointed there. Stock's down about 2.8% here in the aftermarket.
I'm really curious to hear what they have to say about their acquisitions. Just looking at how many purchases they've made so far this year, 7 of them. I want to understand how it all fits together as part of their long-term vision. I know that there's this, breakdown between software sales and hardware sales. The software sales are more attractive, higher margins, also recurring revenue, which is attractive to an old school tech company like Cisco. Well,
in fairness, I think those acquisitions, a couple of those have already been accretive to revenue. And remember, this was a company that had a negative sign in front of its revenue growth for quite some time. And they've solidly, we're still in single digits, but they've returned to revenue growth. I know it's not like the hyper growth that we get out of these other tech companies, but I guess growth is growth, right?
Old school tech company.
Well, an old school tech company now talking about AI, so you can go ahead and add that to your list of companies that are talking about AI. Changer? It was literally in the press release, right? They're the
I'm waiting
saying
for AI. When does AI appear?
They're innovating in key areas like AI, security, and cloud. So I imagine there will be some questions from analysts on what exactly that looks like when it comes to AI.
Yeah.
Can you even write a press release now without mentioning AI?
No.
That's the thing.
No.
Because then the AI would just read the press release.
Remember
and
when
be
it
like,
used to be like cannabis or plant-based? Now
Maybe
it's
if you're
AI.
a golfing company, you can do it.
Yeah.
I don't know.
190,000 in revenue.
They've got a fair amount of cash, too, on hand, so it'll be interesting to see maybe how they are pushed to be like, what do you do with it? How much do you return to shareholders, or do you do something? Why are you smiling?
Me?
Mr. Smart Bostic?
Because he's got a driver being delivered today.
There's a lot going on in my head, actually. It's
Thinking about his golfing
It's a
game.
driving iron. It's one of those hybrid. I mean, I never used the hybrids. Have you ever used the hybrids?
No.
Yeah, okay, yeah.
A hybrid
There you
putter?
go. Huh? No, it's
putter?
like, you know, how you hit the ball off the tee, Carol Massar. And normally use a driver for that, or you can use an iron. And then they have something called a hybrid, which is kind of a combination of both. And in theory, this is going to make my golf game so much better. Which
All right.
probably
I
won't.
feel like
Romain's going to give
so
us golf
much
lessons.
mansplaining
He's
is
gonna
going
give
on
us golf
about the
lessons, and I'm
game
going to learn
of
how to
golf.
learn how to tie a bow tie.
And that's not mansplaining if you ask for the mansplation.
We got to go.
Everybody
Do
should
we?
see the
Yeah.
Barbie movie. I'm just going to say that.
Okay.
All right.
Who's mansplaining now?
All right. I guess I am. I think they call that women's planning. All right, guys, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals, Wednesday, one and done. We will see you again, of course, tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody. Fun chat with our TV colleagues.
fun.
Yeah, I always love that. And I do feel like we're in this kind of TikTok moment, waiting for Jackson Hole, waiting to see what drops next when it comes to China. As you know, we have been talking about concerns over China's property market, those woes worsening, beginning to impact China's shadow banking. China, no doubt about it. Go to the Bloomberg, go to Bloomberg.com, dominating so many of our reporting today and among many of the most read stories on the Bloomberg. So let's get to it with our guest. And Tim, it's really someone we lean on big time when it comes to China.
We've got back with us Dexter Roberts. He's director of China Affairs at the Mansfield Center at the University of Montana. He's also an award-winning journalist, former Bloomberg Businessweek China bureau chief. His book, The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World, was chosen as one of The Economist's best book of the year for 2020. Very pleased to have him back with us, joining us from Missoula, Montana. Tiff, how are you?
I'm doing well. Thanks for having me. Great to be back, Tim and Carol.
Well, you know, whenever we get you back, we know that it's because there's something big going on in China, and this has been happening for a while, and we wanted you to get back with us for a while. Just from, we spent some time with Shahzad Kazi earlier from China Beige Book. Give us the 30,000-foot view here, as somebody who spent so much time in China, what your impression now as a former insider, now an outsider, what you're seeing happen and what you're hearing from your sources on the ground.
Yeah, well, I think what China's really dealing with all this bad economic news we're hearing is trying to work out some serious structural challenges. So this is not cyclical. And that, by the way, means that the latest surprise rate cut on Tuesday, I'm not confident is going to help much. So China's in the midst of, this is up from the 10,000 feet up. It's in the midst of this transition from its previous investment and debt-driven economic model to one they hope would be much more driven by household consumption. And they are really struggling with that. Confidence amongst households and amongst companies is a huge challenge still today.
It actually mirrors very, very much so what Shahzad said to us. This whole idea of and his kind of takeaway was the world would be so much better with a Chinese economy that imports more, and that you have this domestic economy that is spending a domestic home front, if you will, that is spending more on stuff, kind of maybe more to some of the developed world. So, Tiff, how do we, as many of us are outsiders, haven't spent the time in China like you have, we see these headlines, it feels like a lot, it feels like, we're hearing about the potential for Chinese contagion. How do you think we should be smart in terms of reading these headlines?
Well, I think one thing we have to keep in mind is that as long as the leadership in Beijing, and I'm thinking particularly the very top leaders in Xi Jinping, continue to have this focus on politicizing the economy and basically masterminding from above how they want things to change, and that includes the latest news about more instructions to investment bankers, economists, and company officials to make sure they don't say negative things about the economy. But then obviously this extends much further into the economy. As long as they keep doing that, I think these changes we see, on a weekly, monthly basis are not going to make a lot of difference. And by the way, that politicization of the economy has huge repercussions within China as well. We see it with this. We see it with wealthy people voting with their feet, if you will, and trying to move abroad, including moving their capital abroad.
But does it actually move the needle when it comes to the power that the Chinese Communist Party has? Shahzad said no, it doesn't.
Well, I think that's the issue. The Communist Party is more powerful than it has been in literally decades. I was there for almost 25 years, and I never saw anything like this, even as the Communist Party did interfere in the economy. But they've moved it to a whole new level of meddling, if you will, in the economy. And I think that's a reality we're going to be dealing with for quite a while, as long as we have Xi Jinping continue to be in charge here.
A company that is constantly meddled in, to me, maybe has limits ultimately, especially if you're trying to attract investors or outside investors. Maybe China doesn't need outside investors. I mean, will it ultimately? I mean, does it need to be kind of part of the open world capitalistic society, or can it just do it on its own?
I think that it cannot do it on its own, and unfortunately, the top leadership seems to think that they can. They talk a lot about self-reliance and thinking that they can go it alone, but they really can't. I mean, we've seen this with the Biden administration's policies and restrictions on the advanced semiconductor industry. These really, really hurt China. China needs the world, needs the technology, needs the investment, technology in particular, to keep moving up the value chain in technology, and particularly things like advanced semiconductors. And so I don't think they can go it alone at this point at all.
Hey, so when, Tim and I talked earlier, because this story kind of struck me, and we know it's been coming because it's not new, but there's the Apple supplier Foxconn beginning iPhone 15 production in India, really ramping up efforts. Like, when we see stuff like that, is that exactly what China wants? Because they want to be on a higher plane in terms of technology. They don't want to be just manufacturing everything. So is that okay, or is that something that's going to be problematic for China? Short term, longer term? I don't know.
I think that China is very aware of the value of having global supply chains run through China, and as companies like Apple turn to other places like India and move more production there, that is a concern of Beijing. So they, the very low end things they already left, your textiles and your toys, and China was very happy to see that go as it moved to Southeast Asia a decade ago. But if you look at big companies like Apple, I think that at that point China's thinking, this is very important to us. They also happen to be, of course, huge employers. Foxconn is the biggest private employer in China.
Yeah, it was interesting to see the iPhone 15 news and we know that Foxconn has been building handsets and products in India for a few years now, but to see him take a flagship product like this, the iPhone 15, and start production on that in India is certainly a really big deal, Tiff. Okay, so let's talk about contagion here. To what extent should the world be concerned that stresses on the Chinese economy are going to spill out across its borders?
I think we unfortunately do need to be very worried. China, for the first time other than 1 month at the beginning of the pandemic, it was the first time since the global financial crisis back in 2009 we see deflation both in consumer prices and factory gate prices last month. And China, I think, China is going to export deflation to the world. We had Janet Yellen say recently that the Chinese economy was a, quote, risk factor for the U.S. economy that sits corporate profits around the world.
So last question, 40 seconds. You're writing a front page story today on China. What's the headline?
The headline is surprise rate cut doesn't convince global market. China downward spiral continues.
Nicely said. Wow. Okay. Great
Sounds like
stuff.
you have experience as a journalist.
An award-winning one at that. Tiff, thank you so much. Always appreciate it. Tiff Roberts, Director of China Affairs at the Mansfield Center at the University of Montana. As we said, award-winning journalist, former Bloomberg Businessweek China Bureau Chief. His book out in 2020, The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World. Great understanding of what's going on in the role of China. Carol Master, Tim Stanovic. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all declined today, but moments ago we heard from Cisco Systems. Shares lower after hours, now by 2%. The largest maker of computer networking equipment delivered a lukewarm revenue forecast for the coming fiscal year, adding to concern that spending on tech infrastructure is slowing. Again, after hours, Cisco right now lower by 2%. S&P today fell 33 points, down by 0.8%. 1%. Pressure on equities and treasuries ramped up in the final minutes of today's session as traders digested hawkish comments from Fed officials at their last meeting. The Dow down 180 points, a drop there of 0.5%. NASDAQ down 156, a drop there of 1.1%. 10-year yield 4.26% with a 2-year yielding 4.98%. Spot gold down $8 the ounce to $18.93, down by about 0.5%. And West Texas Intermediate crude oil today down 2.2%, $79.23 a barrel. So again, recapping, the Dow, the S&P, NASDAQ, all lower. Cisco after hours, after earnings, down now by just about 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovic here in our Bloomberg Interactive Broker Studio. This story kind of needs, at least the beginning of it, a bit of a table read, don't you think, Tim?
I think so.
All right, so you want to kick it off?
Yeah, I will. The smell of seared red meat, a $180 porterhouse to be precise, hung in the air as bankers and traders from Goldman Sachs bluntly sized up their CEO.
In a once unthinkable public display, a boisterous crew of senior managers gathered at an upscale Manhattan steakhouse last month and soon veered off their anodyne agenda. The conversation turned to the company's failings and, in particular, those of its leader, dun dun dun, David Solomon.
Oh, their audience that evening. That was pretty good, Carol. Goldman President John Waldron sat across the white linen topped table and listened patiently as bitterness festers in the ranks this year over David Solomon's leadership. Waldron is being pressed by colleagues to pick a side, beat his own path to win over disgruntled executives, or risk being seen as an affable clone of the CEO.
It's Game of Thrones is the Goldman Sachs version. This story is the most read on the Bloomberg Terminal, has all day, by Sri Natarajan and our Shanali Basic. She joins us, Shanali, here in our Bloomberg Interactive Broker Studio. First of all, the writing, just beautiful. Take us back to that dinner.
It is it really is a Wall Street bedtime story, isn't it?
Nicely said.
Yes. I mean, listen, if you're sitting in this story, if you're following Goldman Sachs, you have seen this tension starting to simmer for months. And what is the tension really? First of all, there has been a lot of discontent, grumbling around David Solomon. For a while here, that was just a bunch of grumbling for the most part. It wasn't something that kind of put the spotlight on him in a way that really put into question his leadership. But what happened since then was that performance this year has not been as good. There's some senior leaders that have left at scale. And the question about whether this turnover is normal or way more than normal is a significant lingering question over at Goldman. So who's John Waldron? John Waldron has spent about 30 years working alongside David Solomon.
He's a buddy.
They're very close. They're very close friends. And by the way, John, one of his qualities as an investment banker that makes him one of the most trusted in the world, from everyone from the Murdochs to Disney, is that he is loyal to a fault, and he is unrelentingly hardworking and loyal, right? So what happened was he worked at Bear Stearns with David Solomon, joined Goldman on the heels of David Solomon's request, rose the ladder with him there, and he has really been side by side with David for the strategy that has included that messy consumer strategy. So now there's a spotlight on John Waldron, who very recently has been counted as the only potential successor to David Solomon, and now there are questions on whether he's going to be the guy or not in the future. And part of this is, will he be willing to part with his longtime confidant in the process?
Is David Solomon's job, Shanali, really at risk?
This is a very interesting question because at one hand, most of David Solomon's tenure, he had done a really good job. The share price was really benefiting from this. They had done better than the other banks. Their returns on equity were way above what even they had targeted. And that has really waned in the last couple of quarters. Remember, a lot of that is a consumer strategy. It's a heavy reliance on the balance sheet. Some of these problems were pre-David Solomon that are eating into the Goldman life today. Is his job at risk? It really depends on performance, and it really depends on whether these grumblings start to impact the client performance of Goldman Sachs.
The reason I ask is because there's been so much press about this in the last couple of weeks, and in one of the stories I read, I don't remember which one it was, but they quoted Mike Mayo over at Wells Fargo, who was basically like, this is a lot of grumbling from people who used to make, $5 million or used to making $5 million a year, and maybe they're making $3 million a year instead.
This is a really fair point. It is a lot of grumbling. Even for a reporter that covers Goldman for Bloomberg Television, it's a frustrating amount of grumbling, and you would rather focus on something else, to be honest.
It's a good story, though.
The Palace intrigue is so real because this is the top investment bank in the world. For at least 5 years in a row, they've ended #1 on mergers and acquisitions, and anybody inside of Goldman knows their eyes are on them. And so the grumbling is not rare, but the question, again, is this another pivotal turning point because is performance being impacted by it?
So go to the dinner. So here's John Waldron having to take this stuff in. It's his buddy, David Solomon, who he has worked side by side for a long time. So I'm assuming that he likes to think about that maybe he eventually takes over, but is his association with David potentially going to hurt him? And so how does he balance maybe hearing all the grumbling, trying to figure that out, also thinking about his future? And I just feel like it's very complicated.
It is very complicated. And remember, part of the reasons that these dinners are happening is to improve morale at the bank. Because not only have there been issues with David Solomon's kind of personality, he's kind of more brash, abrasive. John Waldron is much more genteel. He is Midwestern. Stanley Druckenmiller, the billionaire investor, even told me he thought of John Waldron as blue collar. And you normally don't think of the president, the sole president of Goldman Sachs being blue collar, but he is very down to earth, so that does come across. And so
bunch of kids, manages his kids like
part-time
sports.
hockey coach, peanut butter and jelly sandwiches for dinner with his kids. You cannot make this stuff up. Oh, English major from Middlebury College, right? It doesn't scream Wall Street to you when you think about John Waldron. However, the point you're making here is that they have had very different personalities, and it's served them well as they've risen up. This kind of listening tour he's doing is part of that improving of morale. Goldman had thousands of layoffs in the last couple of years. They've had to cut pay drastically. And so to that point, people who used to make a certain number of tens of millions of dollars and is making a couple million less, can you really feel sorry for them? The fact of the matter is David Solomon did improve performance at the firm. Part of that meant keeping a clamp on compensation. And that did improve returns for investors. And his job was to make the bank more investor friendly. But for now, the outcome is this, that John now is on this listening tour to improve that morale among the investment banking ranks.
As a reporter who covers this sector, covers Goldman along with Sri, does Goldman want reporters to be telling this story?
No. I would be fairly certain that they don't want any of these stories. I think they would love to be nothing more than a boring bank that is focusing on deals. Back in the day, even just 5 years ago, pre-David Solomon, this was kind of in the era of, the Uber IPO and the Spotify IPO. And when we told stories about Goldman and Morgan Stanley, it was really about the deals they were on. And it was really about the money being made or not made at the trading desks, kind of simpler, more straightforward stories. So this is certainly having such dirty laundry out in such a bright light is not something that Goldman would plan for.
You mentioned turnover. We know the big names who've left in recent quarters. Aside from them, is the bank having a hard time attracting and retaining talent right now? I mean, this is Goldman Sachs we're talking about.
Yes, but remember, it's not. To be very fair to Goldman, it is not just Goldman. The names at Goldman matter because a lot of the people that left were in some line of succession. Think Julian Salisbury, who was the CIO of a more than $2 trillion, almost $3 trillion asset manager, who was clearly a one-day CEO candidate. John Waldron himself was being courted by Carlyle. And so if you look at the types of people left, that's why the attrition matters. But to your point, private equity, hedge funds, tons of Goldman folks have went to big hedge funds, but so have other banks. Citi has lost major talent also to those types of firms where they don't have the same type of regulation as the big banks. They have the ability to pay more. If you are making, tens of millions on the C-suite of one of these banks, you can be making hundreds of millions over 5 years at a private equity firm at the top ranks. So that is a massive differential in terms of pay you're getting at one versus the other type of firm.
All right, I'm trying to think what's more important. Is John Waldron safe? Or should we talk about the middle initial in the memo that David Solomon put out? You got about 45 seconds. You can go wherever you want.
Where to think about this? I think, listen, I keep saying this. We are halfway through the third quarter. for Goldman, the pressure on them is to figure out the consumer business. They have to bite the bullet. Is this next quarter going to be a good quarter or not? Because to the point that Tim was making, performance is everything.
Right.
If you're performing, then none of this, I don't know that any of this really matters all that much in the end. But if you're not performing and they are at a pivotal moment where they have not been performing the last couple of quarters, they need to start to put up the numbers that Wall Street wants this year.
And Goldman wants to go back to those boring stories that we all report on them.
Me too.
Not about the middle initial, which you can read if you head to Bloomberg.com. As we said, it is the most read story in the Bloomberg, has been all day. Shonali, thank you as always. Shonali Bostic, she's our Wall Street reporter. Great insight as always here at Bloomberg News, joining us in our interactive broker studio.
The most read still on the Bloomberg terminal. Check
It's
this
just
story
great.
out.
I just love it. I love the color. Like, were you at that dinner?
I wasn't, but Shree might have been on the wall.
All right, well, let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Donald Trump's legal calendar is getting crowded. Fulton County District Attorney Fani Willis is asking a judge to begin the Georgia trial of Trump and 18 of his former associates on March 4th. That's a day before the pivotal Super Tuesday primaries. Those indicted earlier this week have been charged with allegedly conspiring to overturn Georgia's 2020 election results. Willis is also seeking their arraignment September 5th. Already, Trump faces a possible trial on the classified documents case in January and another trial on hush money payments on March 25th. President Biden is marking a year anniversary of the signing of the Inflation Reduction Act that includes numerous Democratic priorities to address climate change and produce new opportunities for workers.
It's taking the most aggressive action ever on climate energy, ever. I've long said, when I think climate, not a joke, I think jobs.
The law is also leading to lower prices on prescription drugs as well as lower out-of-pocket health expenses. The administration is going across the country touting the law since recent polling indicates few people even know the details about the Inflation Reduction Act. FEMA Administrator Deanne Criswell says the images the world is seeing of the fire devastation in Maui cannot fully convey what the people of the island are going through.
It's the level of devastation from this fire and the feeling of loss from such a culturally rich community that was really palpable everywhere that I went.
Criswell is back in Washington after overseeing operations in Maui. She says about 700 federal personnel are on the ground there, helping search and rescue teams look for victims. Family members are now providing DNA in hopes that will help identify some of the remains. President Biden and First Lady Jill Biden will be traveling to Maui on Monday. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Cisco Systems after hours. A turnaround for the stock. It is now moving higher, up by about 2.3%. Cisco, the largest maker of computer networking equipment, did deliver a lukewarm revenue forecast for the coming fiscal year, adding to concern that spending on tech infrastructure is slowing. However, right now after hours, after earlier losses, we are looking at Cisco trading higher, up by about 2.3%. A down day for the Dow, the S&P, and NASDAQ. FOMC minutes today. Pressure on equities and treasuries ramped up in the final minutes of today's session as traders digested hawkish comments from Fed officials at their last meeting. S&P today down 33, a drop of 0.8%. The Dow down 180, a decline there of 0.5%. NASDAQ today down 156, a decline of 1.1%. 10-year yield 4.26%, with a 2-year that's yielding 4.96%. Spot gold $18.92 the ounce, down $9 today, down by about 0.5%. And West Texas Intermediate crude down 2.1%, $79.29 a barrel. Well, as for the overall market backdrop and the outlook, Jeff Crumpelman is Chief Investment Strategist at Mariner Wealth Advisors, and he was our guest right here on Bloomberg Business Week.
So much of the world is bearish and negative. We're not ragingly bullish. I think we're measured, and we've been measured, and our message, while we have a target, 4,500, we think the fundamental drivers of the economy are just far stronger than the bears or the negative people think.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Again, recapping, stocks lower today with the S&P falling 33 points, down by about 0.8%. Again, the 10-year 4.25%, the 2-year 4.96%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got to Charlie. Thank you for that update. Charlie Pellet with the Bloomberg Business News Flash. Carol Massar, Tim Stenovic live in our Interactive Brokers studio. I got to say, there's a story that I'm obsessed about. We've been talking about it in the newsroom. 3 years ago, a group of 16 youth climate activists decided to take the state of Montana to court, challenging a provision in a law that limits climate change considerations during environmental reviews of proposed fossil fuel projects. This week, Tim, they won.
That's right. On August 14th, a judge there ruled that the current state law violates the youth plaintiffs' right to a clean and healthful environment, a right spelled out explicitly in the state's constitution. Carol, it was a sweeping 103-page decision. The judge also in that decision determined that climate change is hurting the young Montanans and that their injuries will grow with increasingly severe climate impacts.
It's a big deal. Climate change, we know, impacting everything, increasingly will. Stressing our infrastructure, we see that. Impacting investing, taking a lead on decision-making and strategy. So with that in mind, it's kind of where we wanted to start with our next guest. Kim Verheiling is with us. She is president of National Buildings Practice at STV, an engineering and infrastructure firm. We talked last October from a broadcast at NJIT, and so we are delighted to have Kim back with us. Kim, how are you?
I'm good. Thanks so much. It's great to hear from both of you again.
And thank you for giving a little bit of a leeway, because we did kind of want to start with you that I am curious, the conversations Tim and I both are, about what you are having within your firm about climate change, the impact and how that might be in terms of future building, future construction, infrastructure build out, how we maybe have to be dealing with it and thinking about it.
Absolutely. Well, climate change is integral, and we're thinking about it on every single project. Obviously, STV does a lot on the transportation side, but we also do a lot in the building side. And so we're all always thinking about, while we're designing or renovating, how are we going to be making sure our buildings are energy efficient? How are we thinking about impact to the climate, as well as resilience? And we see that a lot with some of the storm conditions that have been happening across the country, especially this summer. We've seen it, right? And all of that is really incumbent on us as professionals to take the lead in thinking about better solutions for how we construct our facilities in the future.
Kim, I was talking to a colleague of mine, and Carol, I don't think I told you this story, but we were talking about, he was looking for a new place in Brooklyn, and it was on the first floor And he asked about flooding and, when the sewers back up, because it's a normal thing when it rains now.
Yeah.
And the super told him, oh, don't worry, we'll give you these special doors that you put on the bathroom when it rains. So the overflow stays in the bathroom and doesn't come out of the bathroom.
I see the sandbags in my neighborhood.
Wonderful.
Yeah, how wonderful, right?
Yeah, not a solution.
Yeah, well, and that's right. Well, and obviously those structures that are already in place, it's about prevention, but we want to design so you don't have to do those sorts of things, right? That we have the right infrastructure in place so it never comes to the point where you have to put in those flood barriers.
Yeah, it's kind of crazy. Having said that, one of the other things that you guys think about a lot is bringing the world into buildings and making bringing nature into environments. We work in an incredible office where there is tons of light, tons of glass. People walk in and they're like, this is where you work. And I'm like, yeah, it's pretty amazing. Because I've worked in a basement studio in a New York building where there were no windows and I had no idea what was going on outside. That is also a big part of what you guys do in thinking, whether it's schools, whether it's correctional facilities. Talk to us a little bit about daylighting.
Yeah, so and daylighting is really the idea that you're letting natural sunlight either directly or indirectly into a building. But you are correct. Daylight and is one of our top design philosophies, irrespective of what building type we're looking at. And I think for those of us during COVID, when we were scrambling to create offices in our homes, we realized if you were in a space where you weren't getting daylight and you weren't also having that connection to nature, it really did impact your mood. And so when we think about daylighting, especially on the educational side, it does help improve both student health, and we've seen that it impacts student achievement. So math and reading scores directly. And conversely, if you don't have that amazing daylight come in, we have discomfort, which can reduce learning, and it's also detrimental to mental health. And that's kind of how it ties over into, as we think of justice and correctional facilities. Mm-hmm. It's on that side, it's about providing a normative environment so that occupants can thrive and not have unsafe conditions, both for staff and persons in custody.
Tim, I don't know about you. Yeah. Oh, you were working here. You didn't really work from home, right? But
we were here.
When I worked from home for 6 or 7 months, I actually, we were doing our live broadcast, but I set up right next to my window, and it was just really kind of nice, but I wanted to be by daylight, so I totally get that. Like, that makes a lot of sense, and I think it made a real difference, feeling that you really couldn't go anywhere, but to at least have kind of a beautiful view outside.
But one challenge here with this idea is that so much of what we see with where kids are in school and the existing infrastructure, this is stuff that's built, Kim, more than 100 years ago. Can you retrofit this stuff to bring the daylight in, or do you have to start over?
No, you're absolutely right. But it is true. Obviously, new construction is much easier because then you can orient the school towards to north light, which is always the nicest light to bring in. And so renovation is a little bit more challenging. But of course, we can look to the exterior wall to really maximize the window and how much light comes in. And then we also use other technologies, meaning that outside, you may bring in all that light, but you also don't want glare, right? There is a point where it gets to be too much light, and then all of a sudden the temperature goes up in the classroom and it's uncomfortable, right? And then there's a different problem. And so what we do on daylighting strategies is we think about maximizing the glazing, but also putting in shading controls that will monitor and limit depending on the amount of light coming in during the day. And we also tie that to artificial lighting in the classroom with sensors so that we can also be energy efficient, which goes back to our earlier conversation about climate change, right? And those are some of the moves we're doing to try and lessen the operational costs for school districts.
Hey, Kim, just got 30 seconds. If you had to talk about what is the biggest trend when it comes to building right now, what is it?
Let's see, the trend to building. I would say it's about a holistic experience and human and mental health, and making sure we're providing environments that help people thrive for the task at hand in that environment.
All right, well, I feel like our boss definitely got that memo years ago.
Yeah,
no, we've been very
so
lucky, and we know it.
I've been in some bad offices, Carol.
I have too.
This is not one of them.
Old, where the windows don't open, and I'm just, or there are no windows.
Too for years.
Yeah, I was in the old Exxon building. That was our studio.
The basement of the New York Stock Exchange.
right? And
Yeah.
you're like, I have no idea what's going on outside. Hey, Kim, be well. Have a great rest of the summer. Kim Verhalig, she's president of National Buildings Practice at STV, joining us on Zoom there. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are continuing to keep an eye on shares of Cisco Systems. They are trading higher now after hours. Cisco, though, delivered a lukewarm revenue forecast for the coming fiscal year, adding to concern that spending on tech infrastructure is slowing. Dan Morgan is Senior Portfolio Manager at Synovus Trust.
It looks like a really good number. I mean, their core unit, which is their secure agile network group, which is where if you were trying to find AI, that was at $8.13 billion. Street was looking for $7.75 billion. They also upped fiscal year 2024 estimate in terms of revenues based on the range that they gave. That was above what the Street was looking for, $56.8 billion.
And after ours, Cisco now up by 2.7%. Apple supplier Foxconn has started iPhone 15 production in India. With more, here's Bloomberg's Courtney Donahoe.
Charlie, it's an effort to further narrow the gap between its India operations and the main manufacturing base in China. Apple wants to greatly increase the volume of new iPhones coming from India. The firm is on a multi-year project to diversify its manufacturing away from China, de-risking the supply chain for its most important products. Tensions between Washington and Beijing make trade less predictable. India, under Prime Minister Narendra Modi, has sought to build closer ties to the U.S. and make itself a manufacturing hub. Charlie?
And that's Courtney Donahoe reporting. Today we had Apple down 0.5%. Those are some of the company stories we're following this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenovec. That's Carol Masser over there. Let's get an update on the world and national news. For that, we go to Nancy Lyons. She's in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The Georgia district attorney prosecuting former President Trump for alleged election crimes is proposing that trial begin March 4th. Trump and 18 co-defendants were indicted by a federal state grand jury earlier this week on charges related to alleged attempts to overturn Georgia's 2020 election results. The defendants have until next Friday to surrender to Georgia authorities. The first Republican presidential debate is a week from today, and the prep work is already underway.
Florida Governor Ron DeSantis may be looking to next Wednesday's Milwaukee debate as the pivot point for his campaign turnaround. Sources tell Bloomberg News the governor's been practicing at least once a week with Brett O'Donnell, the veteran debate coach who helped Mitt Romney, John McCain, and George W. Bush with their prep work for debates. The sources say DeSantis expects to be a primary target on the Milwaukee debate stage. The runaway frontrunner in the Republican race, Donald Trump, is still toying with the idea of sitting it out. In Washington, I'm Nathan Hager, Bloomberg Radio.
A federal appeals court is upholding parts of a decision limiting access to a widely used abortion pill. Judges on the Fifth Circuit Court of Appeals sided with a Texas judge today and agreed the FDA did not properly follow procedures when it loosened access to the pill. So the pill will not be available through the mail, but will remain on the market until a final decision is made by the Supreme Court. There's an update today on the real-life drama behind the Blind Side story. Sean and Leanne Toohey are refuting Michael Oher's allegations that they signed away all his rights to proceeds from the Blind Side film. Their lawyer, Steve Faris, says the family never needed the money and treated Oher like a son, despite never formally adopting him.
This is a sad day. It's devastating to the family, and we hope that it doesn't have a chilling effect on others who want to help needy individuals.
Faris spoke on News Nation. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nance, thank you so much. That story about The Blind Side, well, the movie, of course it was, but the truth of it, the reality.
Well,
what? You're looking
these are just allegations at this point.
I know.
I saw the movie so
But the
long
truth
ago,
is the
Carol.
truth. Like, if you did adopt, just show the papers. If you didn't, then they're not there. The truth doesn't take time. I don't think the truth. The truth is the truth.
I'm
Tim's
so
like,
I haven't read this book in ever.
You never saw the movie with
I saw
Sandra
the
Bullock?
movie. I saw the movie a long time ago, but I saw it on the plane.
All right. Okay. We're gonna just move on to something else.
Something that I know a lot about.
$400
Golf.
putters. Do you really know a lot?
I don't know anything about golf.
Okay.
Played a little bit in middle school.
I grew up in a golf family.
Oh, you did?
Unfortunately, it was my brother's rite of passage, and they all got to learn from my dad, and we never did. I don't know, we just didn't, which